The hidden tax surge driving Chicago residents out. This isn't just a bill. For many Chicago families, it's an eviction notice. Imagine your property tax jumping by 25% or more in a single year. You did nothing wrong, your income didn't change, and your home value didn't suddenly skyrocket. So what happened? You're the victim of a hidden tax surge, a rigged game in Chicago's system that quietly shifts billions of dollars in taxes from massive downtown skyscrapers onto the backs of regular homeowners. This isn't an accident, it's by design. And we're going to show you exactly how it works, why it's forcing your neighbors to pack up and leave, and how the deck is stacked against the average Chicagoan. Imagine opening an envelope and finding out the cost of owning a home just shot up by thousands of dollars effective immediately. This was the reality for a staggering number of households in the Cook County who recently saw their tax bills spike. For many, that's an increase of over $1,700 a year. It's a sudden financial blow that turns a home from a source of stability into a source of stress. This isn't a fluke. It's a symptom of a deep, systematic problem that is hollowing out the city's middle class and accelerating an exodus of residents who simply can't afford to stay. People are leaving not because they don't love Chicago, but because Chicago's tax system is pushing them out. Section 1. The pattern. This story of shocking tax bills is playing out in the bungalows of the Southwest Side, in two flats in Logan Square, suburban homes across Cook County. It's a pattern of financial pain fueling a very real migration crisis. Illinois now has the highest property tax rate in the entire nation. When you look at those numbers, it's no wonder that in a poll after poll, high taxes are number one reason residents say they want to leave the state. They're fleeing to neighboring states like Indiana, where the same family could save thousands of dollars a year on their property tax bill. But there's the critical part you need to understand. These crushing tax hikes on homeowners aren't just happening because the city needs more money, they're happening because the system is being manipulated. While your tax bill is going up, the city's largest and wealthiest property owners are systematically paying less. A study from the Cook County Treasurer's Office was blunt. In just 3 years, a staggering $2 billion in property taxes were shifted from businesses onto the backs of homeowners. This isn't just a tax problem, it's a tax shift, and it's happening through a hidden mechanism most residents don't even know exists. It's a system whose effects have been described as a textbook example of an institutional racism, disproportionately burdening Black and Latino homeowners and creating a wealth transfer from lower value homes to higher value ones. Section 2, the mechanism. So how does this happen? How can your taxes go up while a corporate tower downtown gets a discount? First, you have to understand the basics of property taxes. Think of the entire city of Chicago as one giant pizza. The city government decides how much it costs to buy the whole pizza. That's the total tax levy. Every property owner, from a single-family home to a skyscraper, is responsible for a slice. The size of your slice is determined by your property's assessed value. In theory, if your home is worth 1% of the city's total property value, you pay 1% of the total tax bill. It's all supposed to be fair. But in Cook County, the system has a fatal flaw: the appeals process. After the county's assessor office sets an initial value, owners can appeal to a separate agency, the Cook County Board of Review. This is where the game gets rigged by wealthy and well-connected, large commercial property owners. The owners of office towers and luxury hotels hire teams of expensive lawyers who specialize in one thing: arguing their properties are worth less than the assessor says. And they are incredibly successful. Here are the numbers that expose the entire scheme. In 2024, reassessments, the Cook County Board of Review, granted massive reductions to commercial properties that appealed. They cut a staggering 17% from their assessed values, totaling a $4.3 billion reduction. Now, what about the residential properties? Homeowners who appealed got a reduction of just 1%, or $0.4 billion. Think back to our pizza. The powerful commercial interests successfully argued their slices were too big, and the Board of Review agreed, shrinking them down. But the size of the pizza, the total tax levy the city needs, does not change. So what happens to the parts of the slices that were cut away? They don't just disappear, they get reproportioned and added to everyone else's slice. They get added to your slice. Section 3, the proof. This isn't a theory, it's a documented, verifiable transfer of wealth. The result of those lopsided appeals in that homeowner's share of the entire city's property tax burden literally jumped. Before the appeals process, residential properties were set to account for 49% of Chicago's total assessed value. After the Board of Review finished granting massive cuts to commercial buildings, that tax share shot up to 54%. That 5-point jump represented billions of dollars in tax liability, shifted directly onto families and away from corporate landlords. Why does this happen? It's a battle of resources. A typical homeowner might try to navigate the complex appeals process on their own, or maybe not appeal at all. Meanwhile, the owner of a downtown skyscraper has seasoned attorneys who know every loophole. They flood the system. In the last assessment cycle, business owners appealed their assessments about 64% of the time. Homeowners, only 27% of the time. The consequences are stark. In low-income areas, where appeal rates are as low as 11%, tax bills increase by about 10%. In high-income areas, where residents appeal nearly 46% of the time, bills only increase by about 5%. The system actively rewards those who have the means to challenge it, while punishing those who don't. It's a vicious cycle where overtaxed businesses might leave, eroding the tax base and forcing remaining residents to shoulder an even larger burden. Section 4, the consequence. Let's be perfectly clear about what this means. The millions of dollars in tax breaks that corporate properties receive don't just vanish. That lost revenue has to be made up elsewhere, and it's being made up on the tax bills of ordinary people. This is the direct cause of the shocking increases that force families to make impossible choices. It's the reason people on fixed incomes, seniors, and working-class families are being taxed out of neighborhoods they've lived in for generations. The systematic flaw is especially devastating for Chicago's communities of color. The burden shifts disproportionately falls on low-income Black and Latino homeowners, whose homes are often overassessed to begin with, appeal their assessments at a much lower rate. This creates urban deserts, where residents are forced out not by crime, but an unaffordable tax bill. It's a quiet crisis that is fundamentally reshaping the city. And the pressure is only getting worse. Despite campaign promises, the mayor's first instinct in facing the city's financial mess was to demand more from taxpayers. For the 2025 budget, Mayor Johnson initially proposed a massive $300 million property tax hike to help cover nearly $1 billion deficit. While the city council ultimately rejected the plan and several smaller versions, the administration still passed over $181 million in new taxes and fees on everything from streaming services to ride-sharing to sales tax. For a resident already struggling, it's death by 1,000 cuts. Conclusion and call to action. So, we have a perfect storm. A fundamentally broken and regressive appeals system that favors the rich, a city budget with a massive hole that needs to be filled, and a resident population that is already paying the highest property taxes in the nation. The result is an affordability crisis that is no longer a slow burn, but an active fire, driving people from their homes and actually out of the state. This isn't just about numbers on a spreadsheet, it's about the future of Chicago. A city is its people, but when the system is designed in a way that forces those people out, what is left? When teachers, firefighters, nurses, and small business owners can no longer afford to live in the city they serve, who replace them? The hidden tax surge is not just an economic issue, existential threat to the character and soul of Chicago. Are you a Chicago or Cook County resident who has seen your property tax bill skyrocket? Share your story in the comments below. It's time to bring the hidden crisis out into the open. As everyday Chicagoans are taxed out of their homes, who will be left to fill the city?